Bertemu kembali dalam Niaga AWANI bersama saya Nabilah Khaleeda. Baik, selepas tidak aktif selama beberapa dekad, Battersea Power Station yang dipulihkan serta ditukar menjadi pusat beli belah akan dibuka secara rasmi untuk orang ramai yang mahu meneroka mercu tanda ikonik itu bermula 14 Oktober. Pengarang kanan dan penerbit eksekutif Ibrahim Sani yang sudah berada di Kota London ada perincian berkenaan pelancaran tersebut. Ibrahim, teruskan dengan laporan anda.
Okey, terima kasih kepada rakan setugas di Bukit Jalil. Saya sekarang berada di Battersea Power Station di London untuk menghadiri pelancaran pembukaan Battersea Power Station. Ia merupakan sebuah mix development di mana ada residential, ada commercial dan juga ada office. Pembukaan ini akan dirasmikan oleh Yang di-Pertuan Agong pada 12 Oktober. Dan pada 14 Oktober ada pembukaan untuk orang awam. Buat masa ni, fasa pertama dan kedua telah pun habis dijual. Fasa ketiga, 95% telah pun dijual. Ini residential. Untuk commercial, pelbagai jenama dan brand-brand seperti Apple yang telah pun mengambil sebanyak 500,000 kaki persegi pejabat di dalam Battersea ini. Dan selain daripada itu, beberapa perkara yang penting harus dikongsikan bersama. First is the type of brands yang telah datang untuk membuka kedai-kedai retail mereka di Battersea Power Station, termasuk Nike, Polestar iaitu sebuah kenderaan EV, dan juga Starbucks dan juga Pret a Manger, semuanya telah pun buka. Antara attractiveness lokasi ini adalah pertama, kedudukan dia adalah di Central London. Walaupun di South Bank River Thames, di belakang saya adalah River Thames, kita boleh pan ke sana, tapi sebenarnya ia still Central London. Selaku peminat tegar Chelsea, Stamford Bridge belakang sana, sekitar 2 batu ataupun about 3 or 4 kilometers away, West London, dan di ujung sana Canary Wharf dan sebagainya di East London. Dan selain daripada itu pertama, dia lokasi. Kedua adalah Tube Station. Tube Station Battersea Power Station terletak pada Northern Line dan masih lagi berada di dalam kedudukan Zone 1 Tube Station. So ini memberikan satu gambaran prestige kepada lokasi yang berhampiran dengan Central London. Westminster hanya 12 minit sahaja daripada sini. Lords Houses of Parliament 12 minit, 13 minit daripada sini, dan Oxford Circus dan sebagainya, Piccadilly Circus, semuanya hanya about 10 to 15 minutes away daripada stesen Battersea. Disebabkan prestigenya dekat situ ataupun lokasi kedudukan yang penting dekat situ, ia memberikan gambaran jelas bahawa ini merupakan lokasi premium yang memberikan tumpuan kepada proximity to the Central London. Ia juga ada mixed development di mana ia memberikan satu tumpuan yang positif terhadap pembangunan bersama, and most importantly social and juga open spaces. So di depan saya ni adalah taman open spaces. Baru-baru ni diorang buat hari keramaian untuk sambutan Jubilee mendiang Ratu Elizabeth II, di mana sekitar 85,000 pengunjung datang di open spaces seperti ini. Jadi apa yang kita akan lihat pada esok 12 Oktober adalah pelancaran yang akan dilakukan oleh Yang di-Pertuan Agong, dan saya akan memberikan tumpuan khusus terhadap pelancaran tersebut. Also, importantly, saya akan cuba mendapatkan temu ramah ataupun wawancara khas dengan pihak pembangun di sini di United Kingdom serta beberapa shareholders Battersea iaitu SP Setia, Sime Darby Property, PNB dan juga EPF ataupun KWSP. Semuanya akan berlaku dalam jangka masa dekat ini. Now, kita faham di Malaysia ada pelbagai perbincangan terhadap politik, PRU dan sebagainya, tapi business as usual juga berlaku serata dunia. This is one of those berita business as usual. Okey, sekian saja Ibrahim Sani di lokasi Battersea Power Station di London.
Wow, that sounds interesting, Ibrahim. Thank you for the report. But now let's move on to international news. The International Monetary Fund is downgrading its outlook for the world economy for next year, citing a long list of the threats that include Russia's war against Ukraine and also chronic inflation pressures, punishing interest rates and the lingering consequences of the global pandemic. The 190-country lending agency forecast Tuesday that the global economy would eke out growth of just 2.7% next year, down from 2.9% it had estimated in July. The worst is yet to come, said IMF chief economist Pierre-Olivier.
The global economy continues to face steep challenges shaped by three powerful forces: the Russian invasion of Ukraine, the cost of living crisis caused by persistent and broadening inflation pressures, and the slowdown in China. Our global growth forecast for this year is unchanged at 3.2%, while our projection for 2023 is lowered to 2.7%, 0.2 percentage points lower than the July forecast. 2023 slowdown will be broad-based, with countries accounting for a third of the global economy expected to contract this year or next. The three largest economies, the United States, China, and the euro area, will continue to stall. In short, the worst is yet to come, and for many people, 2023 will feel like a recession. Our October World Economic Outlook report presents a risk assessment around our baseline projections. With 25% probability, global growth next year could slow down to below 2%, a historically low level. We've only had that 5 times since 1970. If many of the risks materialize, global growth would decline to 1.1% with quasi-stagnant income per capita next year. According to our calculations, the likelihood of such an adverse scenario would be around 10 to 15%.
Meanwhile, the International Monetary Fund said global financial stability risks have increased amid historic high inflation as the financial agency released its recent Global Financial Stability Report. The International Monetary Fund is downgrading its outlook for the world economy for next year, citing a long list of threats that include Russia's war against Ukraine, chronic inflation pressures, also punishing interest rates, and the lingering consequences of the global pandemic.
Global financial stability risks have increased with a balance of risk that is skewed to the downside. Amid highest inflation in decades and extraordinary uncertainty, markets have been extremely volatile. Risk assets such as equities and corporate bonds have declined sharply. A deterioration in market liquidity has amplified price moves, and financial conditions have tightened globally. In many advanced economies, financial conditions are now tight by historical standards. In some emerging markets, they have reached levels last seen during the height of the COVID-19 crisis. With conditions worsening in recent weeks, key gauges of systemic risk, such as higher dollar funding costs and counterparty spreads, have risen. There's a risk of disorderly tightening in financial conditions that may interact with pre-existing vulnerabilities. Investors may further reassess the outlook if inflationary pressures do not abate as quickly as currently anticipated, or if the economic slowdown intensifies.
On a separate news, the S&P 500 and Nasdaq ended lower on Tuesday, with indications from the Bank of England that it would support the country's bond market for just 3 more days, adding to market jitters late in the session. Trading was volatile, with investors cautious ahead of key US inflation data and the start of third quarter earnings later this week. All 3 major indexes fell in afternoon trading after Bank of England Governor Andrew Bailey told pension fund managers to finish rebalancing their positions by Friday, when the British Central Bank is due to end its emergency support program for the country's bond market. The Dow Jones Industrial Average rose 36.44 points or 0.12%. The S&P 500 lost 23.65 points or 0.65%, and the Nasdaq Composite dropped 115.91 points or 1.1%. The Fed has been aggressively raising rates to curb inflation and is expected to continue with more increases into next year. Separately, oil prices settled 2% lower on Tuesday, extending the previous session's almost 2% decline as recession fears and a flare-up in COVID-19 cases in China raised concerns over global demand. World Bank President David Malpass and International Monetary Fund Managing Director Kristalina Georgieva warned on Monday of a growing risk of global recession and said inflation remained a continuing problem. Brent crude settled down $1.90 or 2% to $94.29 a barrel, while US Texas Intermediate crude settled down $1.78 or 2% to $89.35. All surged early this year, bringing Brent close to its record high of $147 as Russia's invasion of Ukraine added to supply concerns, but prices have slid on economic fears. US crude oil stockpiles were expected to have risen last week after having fallen the prior 2 weeks, a preliminary Reuters poll showed on Tuesday. Moving on, German Chancellor Olaf Scholz says he plans to discuss how to bring down soaring fossil fuel prices with his counterparts in the group of 7 industrial powers. Scholz told a conference on Germany's machinery industry on Tuesday that the very first task must be to ensure that the prices for fossil resources, gas, oil and coal come back down. He noted that it could not be done unilaterally. Scholz said he plans to bring up mutual responsibility, particularly on gas prices, in all his international talks, including at a video conference of G7 leaders planned later on Tuesday. He said that we need a negotiated process in which prices come back down to a reasonable level. Scholz said that it was the same idea that led to the founding of the G7 in the 1970s. Blanket manufacturers in western Turkey are seeing a boom in orders from Europe as the worsening energy crisis in the region pushes presidents to stockpile materials for winter. Ali Zengi owns the largest textile manufacturer in the western province of Usak, said orders from Europe have increased significantly since the outbreak of the Russia-Ukraine conflict. His factory is now producing more than 6,000 blankets a day to meet the surging demand, and more than 450 employees are working around the clock in 3 shifts. Other manufacturing sectors in Turkey are also embracing increasing business opportunities as the country among the favorite destinations of European manufacturers, which are forced by soaring energy prices and impeded supply chains to relocate their production lines. Ufuk Olgun, a Turkish energy expert, pointed out that any country's subsidy policy has a limit, and in a global energy prices continue to rise, production costs will only get higher. Meanwhile, Japan's lifting of entry restrictions for foreign nationals and a weak Japanese yen are sparking hopes in the country's tourism sector for the beginning of a recovery after over 2 years of slowdown during the global COVID-19 pandemic. Japan will open its borders to independent tourists and lift visa requirements on October 11th for the first time since they were implemented during the COVID-19 pandemic. The weaker yen, which plunged to a 24-year low against a dollar earlier this year, is also expected to attract inbound tourists to the country and boost spending. The Japanese government has responded to immense pressure from the tourism sector and international travelers to ease its border restrictions and resume visa-free travel. Japan is the only country among the G7 that had maintained restrictions on arrivals for so long. Despite the lifting restrictions, the tourism sector still faces challenges, including staff shortages and runway inflation that has pushed prices up 15 to 20% since 2019. Some people in Pakistan are turning to solar energy to power their homes. Conventional power through the electric grid has become more expensive, and Pakistan has long suffered a chronic shortage of it, leading to power cuts, particularly in the hot summer months. Thermal power generation requires a fossil fuel to burn, which is then converted into electricity. With the recent hike in global fuel prices, private households and industry in Pakistan has faced skyrocketing electric bills. Bari says that Pakistan needs to shift its focus towards renewable energy sources. According to a World Bank report published in June 2020, Pakistan has huge solar resource potential. By using less than 1% of the country's area for solar energy generation, Pakistan would meet its current electricity demand. And that is all for today's Niaga AWANI. Be sure to tune in to us every weekday, Monday to Friday, 9 a.m. only on Astro channel 501. I'm Nabilah Khaleeda. Thank you so much for watching.